Good morning. Thank you, Premier, for putting on this fantastic conference. Happy to moderate the panel on the exchange space. I want to introduce the two panelists first, and then Premier to ask us to mention a little bit about what Pantera Capital is doing. Bobby Lee, to my right, grew up in the Ivory Coast in Africa, and then went to high school at Lawrenceville School in New Jersey, and then got computer science bachelor's and master's at Stanford. And then 7 years ago, decided to move to China to do some engineering work, and then recently launched BTCChina. BTCChina is the largest exchange in China, and it's been involved in the wild ramp up in September, October, November of Bitcoin in China, and then it's been part of the whole process of dealing with regulations in China. And Jesse Powell is from my hometown of Sacramento, and has a degree in philosophy and ethics, and has gotten into quite a number of interesting virtual businesses, and 2 or 3 years ago now actually launched Payward, which runs the Kraken exchange. And then just to mention a little bit about what Pantera has been doing. In 2011, my brother was doing some Bitcoin mining, got me excited about Bitcoin, and I was fascinated by it, but really didn't do anything, very pragmatic or constructive with it for a while. And at the beginning of last year, spent the time to actually read a lot of the papers and realized the promise Bitcoin had for moving money around the world and making many of the businesses we do much more efficient. So I started spending full time devoted on Bitcoin. And as I got more and more excited about it, started investing in more substantially in Bitcoin and joining up with more and more firms that were interested in the space. And now we have a firm that has 18 people fully focused on Bitcoin. We're managing assets in the digital currency space, mainly Bitcoin, but we're also an investor in Ripple Labs. We're quite excited about the promise of that distributed exchange. And we're invested essentially in currencies and then also companies in the space. And so we've been supporters of entrepreneurs that we think are going to help broaden the adoption of Bitcoin. And we do try and help out on the regulatory side and try and just be as proactive as we can to help essentially reduce the resistance to Bitcoin adoption. It seems like, as long as it's not resisted, Bitcoin will continue to grow because it has such compelling attributes. And the format here, I'd like to start with a few questions that I think are of general interest, but towards the end, happy to take questions from the audience. I guess the first question that people have posed are, what advances are you in your own exchange or in the industry seeing in security? Because that's the Achilles heel of the news over the last 6 months.
So Bitcoin exchanges are complicated, very complicated to operate. Security, at the vanilla side, it's about exchanges hold a lot of coins, hot wallet, cold storage. It's about not getting that stolen. But just as important is also the infrastructure such that hackers can come in and create additional balances on their accounts. So if you think about it, for customers, with the Mt. Gox incident, for the first time, the whole world now knows about the dangers, if you will, of when an exchange goes bust, goes out of business. In reality, BTCChina has been around since almost 3 years now, since June of 2011. And over the course of the first few years, we saw 6 to 7 exchanges in China go bust, just disappear in the early years of 2011, 2012. In 2013, we've seen some more exchanges come on the marketplace in China. And since then, at least 2 have gone bust already. So I personally think, probably 2 more might go out of business this year in China, other exchanges. And part of it has to do with security. So it could be, hackers stealing coins such that the exchange becomes insolvent. The second problem is if the management just runs a bad business, they just, overspend or they just drive the business to the ground, that kind of company will also go bust. And the third is either fraud or management, trying to steal the coins, or it's all fraud to begin with. So we've seen examples of all 3 in China, and we'll find out what exactly happened at Mt. Gox. Yeah.
Yeah, obviously there's a lot to be concerned about in the security department. There's so many attack vectors with Bitcoin and just so many ways that you can screw up your security. You know, as I've seen with Gox, apparently it's easy to just lose a 200,000 Bitcoin wallet and find it a couple weeks later. You know, so we've faced a lot of attacks. You know, people are constantly hammering our data center, trying to social engineer their way into a KVM on our servers. You know, there's the multisig. There's better and better multisig services coming out that I think we've built our own system, but I think that those will be better for people that aren't as technically far along. But yeah, obviously it's a huge concern, and personal physical security as well. I think we'll see the space continue to evolve for better and better tools in those departments. But for now, I think that we as an industry need to come together on some standards, and it would be great to have an auditor that could come to all the major exchanges and perform an audit and release a report and say these are the good guys, and then these other guys who either didn't participate in the audit or didn't pass the audit should just stay away from those guys.
Jesse, you said a couple of the things I'd love to follow up on. The first one is multisig. Do you mind sharing where you think that's heading and how it's going to impact?
Yeah, I think it's got great uses just for the consumer in escrow, and it may allow some wallets to not even hold customer funds. For exchanges, it's not as practical because we're obviously doing thousands of transactions a day, or even within an hour. But for wallets where transactions are less frequent, I think having a multi-sig structure where you don't even have to trust the wallet with your keys, they just have one of three, and they're basically just the escrow agent, I think will be very powerful. So that reduces a whole threat vector right there. If they're not holding the coins, they can't lose them.
Sure. Bobby, what do you think about multisig and how important that's going to be?
I think it's going to be important. Like Jesse said, probably more for the cold storage type of offline sort of storage. When I say offline, I mean not necessarily disconnected from the computer, but offline as in not in an active exchange. Because as you know today, all Bitcoin exchanges operate off the blockchain because there's just so much stuff going on. So when things get flushed back onto the blockchain, that's when multisig comes into play.
I guess a question that I think through, is it obvious that exchanges have to have the custody function with them? And why can't we see an industry where the exchanges are separate from the custodian, so that you buy your Bitcoins on your exchange and you send it to some vault type service somewhere else that's potentially, does it have to be commingled?
No, I think that would be ideal, really. I mean, we don't do that for fiat, right? You don't send us stacks of cash, and we don't keep $100 million in the closet, at our office. It's great to be able to trust a bank to hold that money, and I wish that we had a reliable Bitcoin bank that we could keep our customers' Bitcoin deposits at. So I think that's a valuable service that somebody will eventually build, and we'll be able to build other services on top of that. And I don't think brokers and exchanges necessarily need to be the custodians of those funds ultimately.
Yeah, I think that's a good point. In the end, it's about trust, because with fiat currencies today, we don't, like Jesse said, we don't hold the cash in our office. Obviously, we hold the fiat currency at banks and payment processors, and the reason we trust them is because there's legal ramification. And in the end, the reality with fiat currencies, if it disappears, they just print more and fill the bucket. So with Bitcoin, as you know, that can't happen. Even if there were a really strong a legal bank that held the Bitcoins, if some of it were missing, no one can fill the bucket. Like, it's not like, we ask the core dev, let's just inject another 500,000 coins in here just to top it off because some of it got stolen. So that's a real problem. So if I can't trust them, I'd rather hold it myself. And then, the question is, in 5 years, 10 years, who's going to be the exchange that does a great job of holding the Bitcoins and not get it stolen or lost or fraud? So.
Sure, and I even think you might see an unbundling in the exchange space where right now, like Jesse said, people send in huge amounts of cash waiting to buy Bitcoins at some point. Then when they do the transaction in the exchange, that happens, and then they ultimately end up with Bitcoins, which they store. And some of the exchanges, at one point, I think Mt. Gox had a $1 billion balance sheet, had better part of $100 million in cash sitting around, and 800 million or so worth of Bitcoins. It's not obvious all three of those functions have to be together, the cash deposits, the exchange of Bitcoins to fiat, and the storage of the Bitcoins. And we're seeing some companies develop in this space that are trying to unbundle that into separate bits. And we have, Pantera's invested in a company called Xapo that is doing kind of deep storage or vault services for Bitcoins. And I think you'll see more of those types of companies come out where people will do their transactions on an exchange and then they'll send their Bitcoins to some separate storage type of company. What do you think about, Jesse, you mentioned that the audits or the transparency, most exchanges have yet to produce any kind of third-party audit, and some have been incredibly opaque, as you said. How do you see that developing?
I think that the industry after Gox is obviously, and there are many other exchanges that have failed recently, the industry is going to have to come together and set some standards, and I think the Digital Asset Transfer Authority, the SRO, self-regulatory organization that's coming together, is a good vehicle for doing that. But it could just be anybody in the community could say, I'm going to pick some metrics and review these services, and I'm going to publish a report. And it could at least be a place for people to go if you're just getting into Bitcoin. And I think that was the worst thing about Gox. Like all of us that have been in the space for 3 years, we knew not to keep our money there. But guys that found out about Bitcoin 2 months ago, if you go search for Bitcoin on Google, Gox is like at the top of all, the news articles. It's on the top of all the charts. It's everywhere. And so Gox is the biggest exchange. You're like, sure, I'll just go use Gox, not knowing that they've got all these problems, right? And there wasn't really a great way for you to find out that there were all these problems. So I think that there needs to be a good resource out there, sort of like a Consumer Reports, or a Bitcoin Better Business Bureau that people can go to look if they're doing research, where should I put my money? These are the guys that are doing a good job, and these are the guys that aren't.
Sure. We've done a lot of work trying to study the volume reported by Chinese exchanges over the last 6 or 8 months, and it's not obvious that all of it's totally true. We think Bobby's firm publishes realistic figures, but some of the other exchanges publish just insane volumes where you can see the price ticking 1 cent back and forth for 1,000 back and forth for hundreds of trades in a row, which is, it's theoretically possible. It's 1 billion to 1 that actually is what's going on. So, Bobby, what do you think about getting more transparency in the exchange space, and in particular in China, where there's probably the least?
Yeah, this is a really tough issue. I don't know how many of you know about this problem happening in China right now. Competition is very stiff. We have a lot of competitors and exchanges a lot of companies doing exchanges in China. But the reality is all of them engage in this deceptive marketing of their trading volume. It's really, really frustrating. Part of it has to do with culture in terms of crossing the ethical boundary. They think, unfortunately, I'm not proud of this, but unfortunately in China, they think that it's okay to do it if everyone else is doing it. What I'm referring to is the boasting, the bragging of the trading volumes. And just to give a quick 101 on how to do that, I've studied this in detail, so I could give a lecture on this. But essentially, there's 3 things they could do to sort of show fake volume and fake liquidity. Number 1 is you just wear heels. The way they say is you wear heels, and you just pad your numbers by 10,000 or 20,000 Bitcoins a day. And the easiest way to catch that, and this is the easiest catch, is you just look at one exchange, look at their data feed, how many transactions go through, and over the course of a 24-hour period, you see like 1,200 Bitcoins got exchanged. And then on some of the sites, they'll say 21,200 Bitcoins. They just padded by 20,000. So that way, on that exchange, every day, the volume is like 21,000, 22,000, 20,000, 25,000. It's always over 20,000. So this is like really simple. And yet, some of the data feed providers still allow that. I don't know why they do that. So the second way is actually more complex. This is where it's harder to detect. What they do is, in between every trade, so remember, trades happen 24 hours a day, but they don't happen every millisecond, right? Sometimes they're a few milliseconds apart, a few seconds apart, and sometimes the data feed is slightly delayed by a few seconds. So what they do is, in between two trades, they'll say, oh, let me insert an order, let me sell from my left hand to my right hand at whatever price, and then again, if there's no activity, I'll sell from my right hand to my left hand. And then they've gotten smart, and what they do now is, they used to be just random numbers, and then it would just be like this very even trade volume. And then they're like, oh, that's too easy to tell. So what they do now is they ramp up the left-hand to right-hand trade. You can ramp up the volume based on a real trade. So if a real trade comes in for 10 Bitcoins at this price, maybe 7 minutes later or 12 minutes later or 15 seconds later, they do a fraction of that amount and then do it multiple times. So that way, the fake volumes go up and down with the real volume, but it's like a magnified version of it. And we've seen magnification of anywhere from 10 times to 100 times. Sorry, 10 times to 20 times. So this is really, really bad. I think it's bad transparency. It's just really frustrating. And there's media that has done exposés on this, but the reality is people are still not up to speed on this. And how can you trust an exchange that lies about that kind of stuff? So that's very frustrating. And the third thing is about phantom liquidity. So you know about order books where bid and ask prices go up sort of in a V shape. A phantom order is where they have orders in there pretending they're willing to buy or sell at a certain price, but when the price moves, the orders disappear. So if you want to buy 100 Bitcoins, if you place an order, market order right now, you could say, I could buy the 100 Bitcoins by this price. But if there are phantom orders in there, what you do is you place a market order, boom, your order gets executed at a much higher price because there's no liquidity. So we've seen flash crashes on our competitors' exchanges in China. I won't name them, you know who they are. For example, we did Litecoin trading recently, and in one exchange, the Litecoin trading went from 90 RMB, this is Chinese yuan, from 90 RMB went down to 1 RMB. And what does that show? It's all phantom orders in there. And then someone did a sell and poof, it went to 1 RMB. So it was, and then we've seen Bitcoin prices go down 30% because of phantom orders. So it's uniquely, well, I don't know if it's a uniquely Chinese problem, but it's prevalent in the China market. And it's very, very complex situation there.
Thanks. I'll just do one public service announcement for the Digital Asset Transfer Authority that Jesse mentioned. Jesse and his general counsel, Constance Choi, have done a lot of work with many in the community to set that up. And I'd encourage you, if you haven't looked into it, I'd encourage you to take a look at it, because I think that's at least a good model for how Bitcoin can establish some essentially minimum standards for companies in this space, because all of us that want Bitcoin to succeed and to thrive are impacted when companies that really are not taking the proper care with either their customers' funds or whatever blow up. That ends up hurting the industry and makes regulation come in and much more harshly than it would otherwise. So I think the industry should look at that or other groups to help establish kind of minimum standards. And one of the discussions was to have standards of transparency and audit that each of the exchanges would agree to, and then that would be published for consumers, users of the exchanges, to see that Kraken or BTCChina have achieved these things, and then there are other exchanges out there that certainly don't meet the standards, and consumers could choose. Maybe there's a reason they want to use one of these other exchanges, but most normal consumers would want to use a reputable exchange. I guess switching here to new products, I'd love to think about where you think the exchange space is going. Essentially free form to you if you have strong opinions. I'll just throw out margin trading as that is one example of where the market might be heading. Is there?
Yeah, it's something that we plan to offer very soon. We had it in our beta. It was popular then. We wanted to be able to do it right, which meant achieving a certain level of liquidity on the exchange. And just acquiring the funds to be able to do that. We don't want to lend out of our own customer account. We want to lend out of our own money so that we take the risk on the margin there. So that's something we plan to do very soon. Just in the market in general, other things that seem to be popping up or sort of contract for difference services. Basically betting on the Bitcoin price without having to hold or deliver the asset. So that's just kind of what I'm seeing out there. But Bobby can probably speak more to us, the woes of margin trading.
Yeah, the trend we see is customers want that. They want the leverage. They want to buy more Bitcoins than what they already have. They want to sell more than what they already have. So I think it's an inevitable trend that exchanges or third-party companies will offer, margin trading, leverage trading, or credit lines, or options and derivatives. Now, so in general, if these are well controlled in terms of the risk, I'm supportive of that. What I worry about is two trends which are more dangerous. So when a firm uses its own capital to loan and let people use it, that's okay, I guess. But what's not okay is if the firm is actually using customer assets without the knowledge of the customers and use that to loan it to other customers. So that's a dangerous trend. Without transparency and clarity and regulation, it's hard to tell if other exchanges are doing that right now. And those are the ones who might end up being in a fractional reserve situation where there's a run on the bank and all hell breaks loose and it goes, it just goes bust. So we see some of that in China right now, and I guess it's a warning sign to the rest of the world. Be careful as more exchanges come online, whether they do this kind of stuff. There's also a notion of peer-to-peer lending within the exchange. So someone says, I'll deposit 10 Bitcoins, and I'll loan it out to people who want to sell it, to short sell Bitcoin. And the customer might get some interest out of that, and then the exchange might get some revenue share and so on and so forth. But there's inherent risk because even if you loan out 10 Bitcoins, what happens, depending on the leverage, if it's 2 to 1, 5 to 1, 10 to 1, what happens if it crashes below that, where there's no market, there's a gap in the price? Then not only does the person giving out the loan lose all their Bitcoins, but the exchange might be on the hook for some of that. So we've seen some of that happen already. We've seen in the last few months, in the last 2 months, actually last 1 month since Mt. Gox, there's been a lot of crashes. I think we saw on one exchange the Bitcoin prices went down to $150. I think it was around there. And a lot of people got hurt. A lot of people got their accounts wiped out. And the question is, did the exchange also suffer a loss? And if they did suffer a loss, are they transparent about it, or are they hiding it under the rug and operating, with insufficient capital or negative capital? So these are the pitfalls of an unregulated industry where people go innovate and take more risk, if you will.
I agree. Bitcoin's already high octane enough. It's not obviously need more leverage on it. Yeah. What might reduce regulatory friction is contract for differences or some type of forward contract where we eliminate the need to have the fiat to Bitcoin interface that's so tricky. Do you see examples of forward contracts or futures or contract for differences happening in meaningful size yet, and do you think it's going to be an important part of Bitcoin trading going forward?
Yeah, I think that it will be an important part of trading going forward. Obviously, the more you want to do, the more regulatory hurdles you face. If you get into options and futures, that's CFTC territory. I mean, many things happening on the Bitcoin blockchain now with colored coins, master coin. New assets are being introduced that could also be traded through exchanges. And that brings in questions of SEC regulation. So, right now we're under money transmission in the United States, and it's obviously different everywhere in the world. So, it's just every time you want to add a new feature, you've got to spend $1 million on legal, and then go get 100 licenses. So, it's not. We would like to move forward a lot faster than we've been able to do, just out of regulatory reasons. But I do see those things coming online, and it may just be that some incumbent players add Bitcoin to the services that they already have before the Bitcoin startups are able to do that, just out of regulatory problems.
Mm-hmm. You often hear of dark pools taking big block trades of Bitcoins through the markets that aren't appearing in the exchanges that report their volume to BitcoinCharts.com or whomever. Jesse, do you think our big blocks are trading through dark pools in a meaningful fraction?
Yeah, I would guess that they could make up to 100% of what we see on the open market. I think there are a lot of miners. There are a lot of big players like Coinbase and BitPay that have to move a lot of Bitcoin every day. And obviously, there are a lot of hedge funds that are trying to get into the space now. And if you want to buy $1 million, $5 million, $10 million worth of Bitcoin, it's not really an exchange you can go to do that. So I think a lot of trades are happening off market, especially the big blocks like that. And I do think it's a meaningful amount of Bitcoin that's going through that.
Bobby, do you think there's a lot of block trading going on in China?
I think there is, but overall, as a percentage of real volume, it's not as high. So we have to remember, Bitcoin prices have gone up 10 times, 10 times and more in the last 6 months and 12 months. So I think block trades happen, the dollar value of block trades, I think, have been consistent. People are still, buying or selling $100,000 or $1,000, worth of Bitcoins back and forth. But as a percentage of volume, it's actually getting less and less. So the reality is, over the last 1 year, the trading volume globally for Bitcoin has shifted from a purely, I'm buying Bitcoins because I want to own Bitcoins, and then I'm selling Bitcoins because I just mined a lot, I want to sell them, to a mix where the buying and sellers are becoming a smaller percentage, and the larger percentages of the day traders, of the people who are trying to edge out and day trade for speculation or purposes. And that's not a bad thing, because with the day traders, with the arbitrage people, they actually help stabilize the market. They help bring volume and lessen the volatility. And also, they help bring order around the world in terms of having more consistent prices. So that's the maturation of the exchange model, of the exchange market for Bitcoin in the last 12 months. So that's a good thing for everyone. It's just that the true amount of people, the true volume for people buying Bitcoins and selling Bitcoins, as a percentage, it's come down, I think. And the same goes with the OTC or the dark pools, I think.
Great. One of the themes we're quite focused on is how we believe institutional investors will address Bitcoin over the next 12 months. And one of the stumbling blocks for financial traders, Wall Street type firms to get involved in Bitcoin is, to their eyes, it doesn't exist because it's not on Bloomberg. Yeah. And it's kind of Bloomberg ergo sum, and we got to get Bitcoin onto Bloomberg. So to the extent any of you are customers of Bloomberg, you should be always asking your dealer rep, when are we going to get Bitcoin on Bloomberg? I think it's, it seems like it's getting very close, but they're very driven by their client demand, so it's definitely worth, pressing. And I think once Bloomberg's publishing prices on Bitcoin and other digital currencies, I think that'll enable just a whole new class of users to get involved. One other topic that I'd love to ask you guys about is, do you think you're going to end up with just a few global exchanges that serve all the users, or are we going to end up kind of balkanized with regional exchanges that dominate, say, BTCChina dominant in China, but only in China, and Kraken in Europe or the US, and a Brazilian and a Korean exchange, or are we going to have one, several big global exchanges?
That's a good question. I think it's going to take a while to see what's going to happen there. Obviously, we don't have much penetration in the world as a whole, and it's largely limited by regulatory and banking relationships. And in some countries, it's just, if you're an outsider, you're just not going to get business done there. So I think that we will see some localized exchanges. We'll probably see some big exchanges, one for Europe, one for China, one for the US, maybe Canada, Australia. And there may be some consolidation of those, or we may see an ECN come together where, all these smaller regional exchanges sort of flow through a main exchange for the liquidity. But it's hard to say. Obviously, there's a lot of overhead in running an exchange, and if your market is small, it's just not worth doing it at all. Mm-hmm. The cost of security alone, is huge, and obviously screwing it up is very expensive too. So I think that you need to have a certain scale just to be able to afford to run the business at all. So I think that there may end up being a lot of markets that just aren't served, or they're going to have a high cost of getting in and out of Bitcoin, or some other, there'll be another way for people to get money in and out, like a local Bitcoins that most people use. But yeah, I see it being split up, and I hope that there do turn out to be several major exchanges, because obviously, as we've seen, big exchanges can fail, and the worst thing would be for that to happen and there not to be anybody else for liquidity to go to.
Yeah.
Do you see special regional exchanges in Asia?
Yeah, I do have an opinion on this. I think exchanges will evolve over the next few years into two categories. You'll have the global sort of mega exchanges that do a lot of traffic and volume for the speculation, for the arbitrage. And the reality is you'll still have a lot of regional exchanges. And the reason is an exchange is just like the on-ramp and off-ramp. What we call the internet, this information superhighway, now we're calling Bitcoin, if you will, the money superhighway. So each country will have to have on-ramps and off-ramps onto the money superhighway, and these are the exchanges that allow you to convert fiat into and out of crypto. So it's this very localized thing, so you can't expect one exchange company to do that for all the countries around the world, because there are over 100 different currencies around the world. And each country has their own regulation on fiat, their own policies, and so on and so forth. So I do see a world where there will be dozens, if not hundreds, of exchanges that are focused for the local market, that allow for the in and out of the fiat. And then the liquidity will be fed into a global pool, either a few or maybe alliances of exchanges that will share a liquidity pool. That way people feel comfortable and they can go to the local bank, go to the local exchange, get into and out of crypto. And then local exchanges would be responsible for the KYC, AML, and all the local regulation and stuff like that. So I do see that happening. So I think that's my prediction for the next year or two.
And then kind of going the next dimension to other currencies, do you think there'll be many crypto-to-crypto exchanges that really don't ever handle fiat? There's a few now that really don't want to be part of the fiat-to-crypto exchange space, and they just want to exclusively trade cryptocurrencies against each other.
I think that the ultimate win for that is going to be some distributed exchange that nobody controls. It doesn't have to deal with KYC or anything. So once you're on to a crypto, you can just use this distributed exchange that nobody's responsible for. It's just sort of run on a network like Bitcoin and do all the trading there. So I think that's what the future is. You know, obviously, there's some exchanges now that are just doing crypto to crypto, and how you're going to regulate those guys, I have no idea. And eventually, you're just not going to be able to, because if you try to, the next step is the distributed exchange.
So I think all crypto exchanges, well, they exist, and there will be more of them. But I don't necessarily think it's going to be the end-all solution, because in the end, you know, unless it's a purely virtual business that's totally anonymous and no one knows who's behind it. If they're real people behind it and then they're under a certain jurisdiction, that country will want to regulate it. So my thinking is, you know, it can happen, but it's not going to solve the problem. Like whether you touch fiat or not, it's not going to solve the regulatory hurdles and the KYC and AML. That's just my personal take. Yeah.
And then for your exchanges where you're clearly in the fiat to crypto transition, do you offer other currencies other than Bitcoin, and if so, why? And if so, why not?
So we have Bitcoin and we have Litecoin right now, and the reason is that so this is just based on
the reason is your brother invented Litecoin.
My brother's right there. He suggested it, and I was like, "What's Litecoin?" Okay. But the reality is, a lot of people in China they like it. They trade it. So there's a huge perception that Litecoin is cheaper than Bitcoin. So they say, I can't afford a Bitcoin, so I'll buy Litecoins instead. Yeah. So.
And are people doing something different with Litecoin than they do with Bitcoin in terms of more use or more speculation?
So I didn't give this talk here at this conference, but I'll tell you a secret. In China, Bitcoin as a payment mechanism has not taken off yet. So all the trading volume in Bitcoin, the vast majority is in investment and speculation. And if anything, the speculation part is even bigger part than investment. So in that sense, Bitcoin and Litecoin, it serves the same purpose for investment and speculation.
And then Jesse, on Kraken, do you support altcoins?
Yeah, we've got Litecoin, Namecoin, Ripple, Dogecoin added recently, and Ven. And when we started the exchange, we didn't know that Bitcoin was going to be the winner. You know, we still don't know. So we wanted to build it with the idea in mind that this might just be the 1.0, and there could be other cryptos coming out. It could just be other things we haven't imagined yet. coming out. So we wanted to take an agnostic approach to currencies and just support the currencies that we found interesting or that there was a market demand for. So we've been adding coins slowly. Obviously, there's overhead in adding coins. It's dev cost and maintenance. So we've been careful about the ones we add, and we're trying to vet that the ones that we add. But yeah, obviously there are markets there. Some do some unique things. Litecoin has scrypt mining. Dogecoin is inflationary forever. Namecoin has a domain name system. Ripple does a host of other things with IOUs. So we've added the ones that we found interesting or that there's been a market for. And we'll continue to do that. And hopefully we'll be adding some other asset types as they emerge in the future as well.
And do you see any different use of any one of the coins? Is there anything special that you've noticed?
Yeah, well, Dogecoin is really interesting to me. It seems to have taken over at least Reddit for tipping. It's used way more than the Bitcoin tip bot. So I find that interesting, and the demographic for Dogecoin skews much lower and more heavily female than Bitcoin. So I think just the cuteness of it and the hilarity is appealing to the internet meme community. So yeah, I think it's been used differently in that sense. It's actually used more, I think, than Bitcoin is, whereas Bitcoin is probably seen most by a speculation vehicle or an investment vehicle, and Dogecoin is just something that you tip people with.
Sure. And I wonder if you could comment on the state of the regulatory dynamics in either your own market or globally.
Yeah, so in China, the December regulation was really the first step. And my personal thoughts on that is the Chinese government is actually very busy with a lot of things. You can imagine it's a big country, a lot of things on their mind. And Bitcoin regulation is just not on their list of activities for 2014. That sort of perception. Now, if something happens to Bitcoin where it gains more attention, it gains more, there's more, they need to respond to it, then they'll go in and take a step to respond to it. So for example, what happened with Mt. Gox, that has caused some, thinking at the top of the government, say, hey, let's make sure this fiasco doesn't happen in China. Do we need to take some steps? And it's a slow-moving process. And the reality is just China and a lot of countries are probably mentally deferring to the United States, because the hearsay or the rumor is that the US is going to come out and start implementing some regulation for Bitcoin and so on. Even yesterday, the IRS has come out and said something about Bitcoin. So once the US actually goes through with the process of stating exactly how Bitcoin will be regulated in more clear terms, that's when many other countries will follow. And that's the reality. A lot of the banking sector, financial sector, a lot of the rules and regulations in the US are pretty much copied and adopted by other countries. So we expect that to happen in many countries, including China. So unless another disaster happens, I think a lot of countries will wait for the US to act first, if you will.
Bobby,
yeah.
Can you explain a bit about what happened with China recently? Like it seemed like the government came out and said that Bitcoin was illegal, and then they came back and said that it's fine.
Yeah. I should clarify. So for those of you who think Bitcoin is illegal in China, actually you got it totally wrong. Blame the media. Bitcoin is not illegal in China. So just for the record, a quick 2-minute summary is that Bitcoin has been classified as personal property, as a tangible, sort of as a virtual property, virtual commodity. So people have the basic right to own, buy, sell, trade Bitcoins. And therefore, companies like ours, a Bitcoin exchange, can legitimately offer the service to people to buy and sell and trade Bitcoins. However, Bitcoin is classified not to be a currency. So existing banks, financial institutions, payment processors, they are not allowed to touch Bitcoin directly in the way they touch currency. So no Bitcoin accounts, no Bitcoin loans, no Bitcoin insurance products in China, and so on and so forth. However, these banks and payment processors are allowed to work with Bitcoin exchanges to cater to our business. So that is still the case now.
Cool.
Does that help?
Yeah, that's great. Thanks. Yeah. In the United States and Europe, which are our target markets, the U.S. has been very difficult. Obviously, it's the most heavily regulated when it comes to Bitcoin, as far as I know. We've got the 50-state problem. So, in the EU, we need one license to cover all of the EU. In the US, we need one license for each state. So, and there are 48 states that require licenses. It's a long process. We're getting through the process now. New York is kicking money transmitter applications back, asking people to submit proposals for this BIT license. So it sounds like they're sort of asking the community to come up with the framework for them, pitch it to them, and if they like it, they'll take it. So we're working on that. The US is going to be a long road. As we've seen, even if you have your licenses or even if you have clearance, it's still very difficult to get a bank account, and I think that's the largest hurdle for most businesses in the space now. And for most businesses out there in Europe, they're largely unregulated, but still, you can go to a bank with a letter from the regulator that says your business is not regulated, you're totally clear, no different from selling marbles to people, and the bank will come back and say, well, we think you should be regulated, and come back when you're regulated and you have a license, and then we'll talk about giving you an account. Mm-hmm. And you're just like, well, what am I supposed to do with that, So that's been the biggest hurdle for us. But Europe has been very forward-thinking, and I think that's just traditionally, they've been forward-thinking in payments, mm-hmm. and they're less fearful of these new things than the United States. But it's just a consequence in the U.S. of the state and federal systems, and I don't think the states seem not willing to cede their power to it, but it doesn't make any more sense than having different flyover rules for each state. It's like we have the FAA for a reason, right? And it's cumbersome, and the laws were designed many years ago before the internet, and now they're just honestly nonsensical. We do so much international commerce and so much interstate commerce. I probably buy things from out of the state more than I buy things inside the state. So what's going to happen in the United States? I don't know. I think that right now they've said that they want people just to comply with the existing system. And it may be a number of years before the industry gets big enough where either things change or maybe all the players have just gone through it and dealt with it. But obviously, the incumbents have already gone through the process, and they don't have any incentive to change it. They see it as a barrier to entry, and those are the guys lobbying for these laws. So it's been very difficult for startups in the United States to do any sort of payments or money services thing. Even we've seen PayPal and Square, and Square just recently got hit with a bunch of fines for operating without their licenses. So it's a scary atmosphere. I wish that the United States, instead of going after little guys on local Bitcoins in Florida, would be doing things like investigating big guys like Mt. Gox. But yeah, that's sort of my take on the regulatory.
Great, thanks. We have time for just a couple of questions if there are any in the audience. There's microphones on both sides. There's a question all the way in the back.
Hi, Divya Thakur from BTX Trader. Out of the volume that you guys are seeing on your exchanges, what percentage is retail versus institutional, and what percentage is day trading versus non-day trading?
I would guess that probably 95 to 99% retail right now. And day trading, I think it's the 80-20 rule. I think 80% of the volume is by day traders and 20% by people who want to buy and hold and sell and cash out. That's my rough estimate.
Yeah, that matches our numbers. And I think the institutional players that are buying a lot of Bitcoin are probably buying it off market.
Hi, I'm John Hazel. I'm from Apollo Systems. My day job is a tax advisor while I build this business, and I looked up the ruling yesterday and kind of went through it. And a lot of what you're talking about seems to be now in place. I mean, the government has spoken. They're calling this a commodity, and they're basically putting out a lot of laws that are going to really hurt this as a currency. It's going to be really encouraging more long-term investment that gets a shorter or a smaller tax rate. And it puts a huge burden on a lot of administrators or a lot of companies having to provide now 1099-Bs, having to provide all the tracking of the transactions, and then on just the individual, the way it works. I mean, there is materialism that does make a lot of the smaller transactions probably not on the radar, but the law will state that they do have to actually make every transaction that transaction is being treated as a commodity exchange. So how is this going to affect this? Is this going to make this, as we're trying to do our business, how is this going to transfer into a currency that can be out to the masses? As yesterday said, how can we add a couple zeros to the user base? How is yesterday's ruling going to allow that?
I think it's a matter of time. So
Speaking of time.
Speaking of time.
No, so just quickly, it's a matter of time. I think when the internet came about, if you think about the world before the internet, signatures were legally binding, like on physical paper, but electronic signatures weren't. But at one point, I think signatures by fax were legally binding, whereas signatures on e-documents were not. So over time, the laws will change and adopt it. So today, I think electronic signatures are okay. Am I right? Yeah, whereas for a while, 10 years ago, it was fax signatures okay, but document signatures were not. So same thing with the tax ruling. I think this is just a first step. Down the road, I think it'll be treated more as a currency. So things will change, yeah.
Well, thank you very much, Bobby and Jesse, for your help.
Yeah, thank you.